Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio in Times Square, New York City, we have Suzanne Schmitt. She is the head of financial wellness at New York Life. She joins us for Financial Literacy Month to discuss the Wealth Watch survey, a recurring survey from New York Life that tracks Americans' financial goals and progress towards life goals, not necessarily just what we think about in terms of core finances. Suzanne, it's great to have you with us. Welcome to Trade Talks.
Thank you for having me.
And what's so interesting with Financial Literacy Month, I'm starting to hear more about wellness, not just what kind of portfolio you should be in. Tell us about the methodology behind the survey.
So we've been doing Wealth Watch for roughly 3 years now, and what's really interesting about the survey and the methodology specifically is it's a really robust survey. The last instance, this is the 9th run we've done, surveyed roughly 4,400 people, nationally representative sample, online survey, and the goal of this particular run was to really focus on not just pure financials, but how are people with families feeling about their finances in the country today.
What were some of the common themes?
Common themes really focused on financial resiliency this time, so not surprisingly, people are focusing on what is within their control in a period of what they see as increasingly unstable times. Doubling down on savings, we heard among people who are in a position to save, they're planning on putting aside roughly $9,000 this year, which is a pretty aggressive goal. And to their credit, most on average have hit $2,000 in savings so far. So really focusing on the basics, keeping an eye on inflation, keeping an eye on emergency savings particularly, and really making sure that they're not losing sight of those longer term goals like saving for retirement.
I mean, $2,000, it's a good target to be on right now. And I wonder if you learned from the pandemic, we need to have this extra money because we don't know, these things can happen. Do married couples have a more positive outlook?
They do, and there seems to be a bit of stability and additional planning and preparation that comes with being married. So what we saw with married couples is higher, again, rates of savings, more of a propensity to actually have financial conversations. So more of an incidence of having a financial strategy, more willingness to have those financial conversations with each other. So we feel strongly that that is a good indicator that they are going to be on steadier footing on a go-forward basis. And what I think is really interesting is when we compared married couples to couples that might be living together, there was almost double the amount of savings amongst married couples as compared to those that were cohabitating. Really interesting finding.
That is interesting. Yeah. I wonder if, the efforts that we're doing through Financial Literacy Month and how the industry has really stepped up to make it acceptable to talk about finances, not just one person in control or the other. These efforts are starting to be quantified. Now, life events, they play a powerful role in financial lives. This is what stuck out to me the most in the survey, but particularly so for parents. How so?
Yeah, so for parents, we saw a really high correlation between life events and really doubling down on planning. So as parents move through life events, there was a higher incidence of looking at savings, increasing savings, really looking at their overall investment strategy, and looking ahead to longer term stability. So particularly as parents are having kids and increasingly being exposed to high deductible health plans, for example, our hypothesis is that parents are really having to make sure they're keeping an eye on liquidity particularly, and building that nest egg to ensure that they have cash on hand so that when life events like those kids have the little bumps and bruises, they have some cash on hand to care for those life events.
How do male and female parents differ in terms of expectations and reality?
Yeah, so we really did expect that we would see women perhaps feeling the brunt of parenthood in terms of their finances, and we definitely saw that with the survey. What was really interesting to me was women, as compared to men, saw increasing burden socially, emotionally, physically, and financially. So they looked at their well-being as a parent as being just frankly much harder for them to achieve through the lens of being a parent as compared to male parents.
Now, what about men and women regardless of parental status?
So not surprisingly, men in general are more optimistic. They generally, we know, make more able to set aside savings, and more optimistic when it comes to retirement. So on average, men are looking at saving about $576,000 for retirement, which is great. Women told us through the survey that they would be more happy, more content in essence, saving about $372,000. And I'm calling that out because that's obviously concerning. Women are more apt to be in and out of the workforce due to caregiving, living longer in retirement, on average about 5 years. So we think it's a good incident to call out that it's a great opportunity for women to think about working with a trusted financial professional to make those savings stretch even further.
All right, Suzanne, we appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.